Hi, I always forget to say this, but you can actually see it this time. I'm KareyBrown, broker, owner of Realty Executives, and I am with Chris Burke from Housing and Credit Counseling. So now we're going to talk about reverse mortgages.
Yeah, we're doing a lot of counseling on reverse mortgage right now. The past couple of years has kind of had a big boom. I don't know if you guys are familiar with what reverse mortgage is. There's a lot of commercials right now with a lot of older actors promoting those. What we do is the required counseling that explains what a reverse mortgage is. We go through the pluses and minuses for folks, and then they have to decide if they want to move forward with this and then go to a bank to actually get the reverse mortgage loan. A reverse mortgage is unique in that you take out a loan against your house, the equity that you have in your house. Typically, you'll get about 50% of what the house appraises for. And so here's this lump sum amount that you can use to pay off the existing mortgage if it's enough to pay that off. You could make repairs to the house, you could buy a new car, pay off medical bills, take a trip, whatever. It's money for you to use what you need to use it for. A lot of folks are using it to remodel the house to make it more accessible in their senior years to be able to live in that house for as long as they can. You have to be 62 years of age or older to also qualify for this reverse mortgage loan. And what's unique about it is that, okay, here's this lump sum of money that you can use to take care of this stuff that I mentioned, but you don't make monthly payments to pay that loan back. So therefore, if you have a tight budget, trying to pay that current mortgage payment, for example, or you have other bills, you can't afford to pay this on your limited fixed income with your retirement plan tanked and all that stuff, well, this reverse mortgage can help you supplement that, so to speak, and not burden you with another monthly payment. How this loan is paid back is when you decide to permanently move out of that house, however that may be, 10 years, 5 years, whenever it is. You have to pay back that initial loan that they granted you way back when, plus interest that has been building up over the years. Right now it's like at about a 6% annual rate that the reverse mortgage loan is growing year after year after year. So maybe you got $50,000 10 years ago on your home. You decide to sell it 10 years later and move to Florida where it's always sunny, I don't know. Then
It's a place to go.
Yeah, and then you end up maybe having to pay like $75,000 back 10 years later on that $50,000 loan. And so it's not for everybody. There are some negatives to this, and so our role is to make sure they understand what's going on so they can make the best well-informed decision.
I know we see, before we got out of foreclosures, a lot of reverse mortgages that were in foreclosure, and there wasn't enough equity really to get them out, so they just walked away, or they passed away.
Yeah.
Things like that. So that's definitely the thing to do. So to get a hold of you,
call us at 785-234-0217.
and if you're looking to buy or sell, call us at 785-213-5188.